Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com gives us the rundown on what was hot on the markets this past week, including the U.S. dollar and a weakness in precious metals. Dr. Marc Faber, publisher of the gloomboomdoomreport.com, comments on bonds, what he believes the next hot commodity will be, and that he prefers to invest in European banks over Canadian ones. Chris Vermeulen from the technicaltraders.com gives us his take on crude and gold miners. Tim Cyclesman Wood tells us what the NASDAQ hitting a new record high could mean and how the markets are in inflate or die mode. Plus, at the end of the show, we'll have a company showcase update from Larry Reaugh, CEO and President of American Manganese. We'll talk to Ross Clark right after this.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Ross.
Good to be with you on this shortened week.
Ross, the U.S. dollar, how's it doing?
U.S. dollars had a little bit of life coming off its recent support levels. The index had been down and testing its 50-week moving average here the better part of 4 weeks ago. They staged a bit of a rally towards the highs, had a small pause, and then this week gets popped again. We're up within just a hair of the highs of the year, but not quite taking it out. But clearly, trend is to the upside for the U.S. dollar, and with that, it puts pressure on the precious metals. We ended up with gold finishing off the week here at some of the lowest levels that we've seen since back in January, February. And, it's just it's all part of the normal seasonal. You typically have that strength from the tail end of the year. November, December usually bottoming out, rallying into February, sometimes into early March. But we had good signals at the top as a sell signal. And first correction gave back 38% of the run, a nice Fibonacci retracement down to 1285. Then you had the bounce to 1320, which was another Fib retracement, in this case to the upside of about 60%. And now you're getting the second leg down, which is so typical of gold and silver in most years. What we have to watch for is that in bull market years for gold, the correction back down in April, it's important that it not give back more than 50% of the run-up that it's had from its lows. So in this case, the actual low last year was in August, and if we take the low close there and we measure up to the highs that we put here in February, gold, which sits at 1277 right now, is just going to have to hold at around 1265. That is a bit of, we'd call that the make or break or the line in the sand for the gold market at this point. There's some people will call it a head and shoulders top that's sitting up here in a distribution pattern, and clearly that's it's going to be hard for gold to make it back up and do too much on the upside. But I think this 1265 is the support area we want to be looking for. If it violates that, then any bounces that we have should be fairly minor in scope, probably $20, maybe $30 worth, but see an erosion into June, July, because that would be the classic as far as the gold market is concerned. Now, platinum has been stronger than gold. It's giving back less, and if there's any market that really looks as though it's got potential on the upside, that would be platinum. Held around $880, closed off the week at $906, and it's got a nice base behind it, and seems to be holding its breakout. The other precious metal that everybody likes to talk about is the silver market. And we did a piece this week, a research report, on all three of them. And one of the things that we pointed out was that as far as silver is concerned, the bear market that we've been in since 2011 has got the same characteristics as the bear market that we saw in 1980 through 1993. Couple of waves of selling, good bounce. The channels that we've been running down in very similar style. Actually, if we go back to the previous bear market, which is back in the 1968 to 1972, the same style back there. The implication is that silver is probably going to make a new low in here before it's capable of turning. And so I think you should be looking for silver to probably stay under pressure for a number of months before there's a chance to put in a reasonable base, but think of that as something maybe for the second half of this year.
Now, Ross, you have some technical reports coming up for us?
Yeah, well, we did one on the precious metals, and so that's, as you say, on all three of those, and we can make that one available to listeners. The other thing that we're looking at, we put a piece out on, was the gasoline market, which has its seasonal run, typically would take it out into the April through June stretch, and the technicals that are in place there right now would suggest that this market has had pretty much the easy part of the move off the bottom. It's been significant. We take a look at the UGA, which is the ETF on the oil market, or the gasoline market. So that had a capitulation low in December at around 22 and change, closed off the week here at 32. So pretty significant run, and most people know about this because of what they see when they fill up their gas tank. The technicals would suggest here that we're so overextended right now that the first week with a lower low is probably a catalyst for a fairly significant break. So we've got a piece that we did on that one, which gives a little bit of background.
Ross, thank you so much for chatting with us.
Good to be with you, and happy Easter to everyone.
My guest has been Ross Clark from chartsandmarkets.com. Coming up, Marc Faber next on This Week in Money.
Always consult your investment professional before making any investment decision.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and Canada. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMY.Resources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Marc Faber, editor and publisher of the Gloom Boom Doom Report, online at gloomboomdoom.com. He's speaking to us from Chiang Mai, Thailand. Marc, welcome back to This Week in Money.
Well, it's my pleasure. Thank you very much.
Marc, what do you see ahead for equities and bonds?
Yeah, this is the big question here. Because if you look, for instance, today, they reported in the U.S. strong retail sales, which essentially theoretically would suggest that the economy is strong, but actually bonds rallied strongly, and equities have been kind of drifting upwards. So my view is if I look at U.S. Treasuries, they yield now 2.55%, and Spanish bonds of the same duration, 10 years, they yield 1%. So you may say in the US, well, treasuries have a very low yield, which is true. But many equities, they don't have any yield at all, and they don't have any earnings at all. So relative maybe to equities, they are not such a bad investment, and relative to European bonds, they are probably a marvelous investment.
Do you expect the U.S. dollar to remain strong?
Yeah, this is another issue. At the moment, the bullish consensus about the US dollar is very high, and foreign central banks have been buying dollars and sovereign funds because, as I explained, if you're a sovereign fund and you have to invest cash and into bonds, you have the choices of zero interest rates in Germany, minus interest rates in Switzerland, minus interest rates in Japan, and 2.55 on the 10 years in the US. So the incentive is actually to go for the US. Plus, I mean, at least on the surface, the US economy is doing somewhat better than the European economy. Now, will this all change? Yes, I suppose that at some point the US dollar will weaken. But if all the central banks print money, and the others, the ECB, the Bank of England, the Bank of Japan, the Bank of China prints more than the US, maybe the US dollar stays relatively strong. So we are in markets that are highly manipulated by central banks and also by politicians. And in that environment, to make a prediction is very difficult. I would just diversify, and I would rather bet that the US dollar will weaken, but rather than weaken against another currency, it may weaken against precious metals or against cryptocurrencies or whatever. Who knows?
Mark, for the life of me, I can't understand why somebody would buy a negative interest rate bond. Why would they do that?
Well, this is a good question, because at the present time we have $10 trillion worth of bonds with a negative interest rate. And so a lot of people, they buy them. So I will explain to you the reasoning for buying a bond with a negative interest. Say, Switzerland, we have a negative interest that is fairly high. Actually, over a 10-year period, you would lose about 4%. So, as you can see. But the reason people buy these bonds is if someone invests in an index fund that is tied to the bonds market, say a sovereign bond index fund. In that index fund, they will weight according to the global bond index, which contains Japanese bonds, US bonds, British bonds, Swiss bonds, German bonds. You understand? So automatically, if a sovereign fund invests in a bond index fund, they will buy some of these bonds. Number two, as an individual, I look at the stock market in Switzerland. I happen to think that it's reasonably attractive, but say I look at the bond market in Switzerland and say to myself, or I could say to myself, well, the stock market is so high, and I have a good business. I don't need to make money on my assets, but I just don't want to lose. And I think that in stocks I could lose 30 to 50%, and in bonds I'm going to lose only 4% over a 10-year period. So I may choose to buy bonds. I'm not saying that this is my advice, but I'm trying to explain the reasoning behind some investors buying bonds at the zero interest rate, at less than zero interest rate.
Mark, gold and silver continue to be stuck in a long-term trading range. What do you see ahead for those precious metals?
Well, I think that I'm a holder of gold and also increasingly of platinum. I think they will go up, or that the purchasing power of paper money will go down. I think that's the better way to express it. The value of money will continue to decrease, of paper money, because of central banks' money printing. And I can assure you, in the US, the next time the stock market drops 20%, actually, if in the US the stock market just drops 10%, Mr. Trump, who measures the success of his presidency. If stocks go up, he thinks he's done a great job, and if stocks go down, he thinks that it's a disaster. You understand? They're going to print money one way or the other. So I think that precious metals are an attractive alternative in a period of monetary inflation, even if you don't have much physical inflation, in other words, inflation in consumer prices. But there is inflation in the system, in healthcare costs. There's a lot of inflation in taxes, and there's a lot of inflation in education and so forth, and in services. But in general, I think that, and I've just written a lengthy report about the hyperinflation in Germany in the 20s and compare it to today's inflation, the monetary inflation, which doesn't show up in consumer prices, but it shows up in asset prices. And in both cases, there were social consequences that were very, very negative. But the main takeaway is that whoever in Germany at the time owned gold and silver and foreign exchange, he did okay. So I would suggest that your listeners all own some precious metals. They don't have to put all their money in precious metals, but some of their funds, I think, should be held in precious metals. And as to when they will go up, I mean, I think the best kept secret is that they haven't performed all that badly since December 2015, and many are up and some haven't performed quite as well as expected, but it hasn't been a disaster. And I would look at the setback in gold, maybe we go down to 12.20 or 12.30 as actually a buying opportunity.
Mark, what do you think could be the next hot commodity?
Well, right now it's weeds. But I think in Canada, there are almost 500 companies involved in the sector already, so a lot of them will fade away, and some will survive and probably do quite well. But who exactly the best performing stocks will be, I don't know. But it's a hot sector at the present time. And concerning another hot commodity, the agricultural commodities are low. I mean, the price of coffee, inflation adjusted, is incredibly low. So these are sectors which may do well. Also beef and pork, hog, because a lot of animals became sick, especially in China. So these are sectors that I think can go up a lot in terms of prices, but I just want to warn all listeners, it's very difficult for an individual to invest in these sectors, in these commodities, because the rollover cost is unbelievably high. So if they don't move, you're not going to make any money. They have to move at least like 30% a year just to break even. So unless your timing is impeccable, you're going to lose money.
We'll have more with Marc Faber when This Week in Money returns.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
I'm Kelly Jennings, CEO of PowerBand Solutions. PowerBand is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. PowerBand Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWPF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Marc Faber. Mark, does oil look like it's headed higher?
This is again a political issue, or better said, a geopolitical issue. I think based on the demand and the supply, oil should not go higher. But you never know. We have now to convince neocons at the State Department in the U.S., Mr. Bolton and Mr. Pompeo, these are characters. They could start a war any time, you understand? And if there is a war, if they attack Iran, which is a possibility, especially if the economy weakens, then all hell could break loose. So based on demand and supply, I think the oil is about a little bit overvalued, but based on geopolitics, maybe not.
Mark, your thoughts on uranium?
I think the price is low, and I think specifically Cameco can move higher. So I'm relatively positive in the long run. But again, would I buy the commodity? Probably not. Would I buy uranium-related stocks? Maybe.
Can China win a trade war with President Trump and the United States?
A trade war is bad for everyone. Like a war, in a war, everybody loses something. A lot of people die, a lot of families are destroyed, a lot of people are badly injured, and so forth. So a war is not a win-win situation, it's a lose-lose situation in any event. And the trade war, the same. But my sense is that the U.S. actually needs China more than China needs the U.S. And number two, I think the U.S. is actually more dependent on China than vice versa, because don't forget, the U.S. has very large income from China due to American subsidiaries in China. So in a real trade war, if really things get out of hand, China will export less to the U.S. or nothing, whereby the U.S. has to buy certain goods from China because they need them. But the Chinese could expropriate all the holdings of American corporations in China. Now, you can argue, well, the Chinese have a lot of holdings in Canada and in the U.S. in terms of real estate. Yes, that is correct. But you understand, an individual who holds real estate in the U.S. and in Canada, and I'm talking here about an individual, he is protected by the law. Whereas in China, an American corporation that produces goods and sells these goods to the Chinese, they could be taxed very heavily or expropriated in the worst case and so forth. So the trade war, nobody will win. But I think, quite frankly, the Chinese are in a slightly better position.
What's the latest on China's economy?
Well, the economy is also driven artificially by money printing and by fiscal deficits and by this colossal credit bubble. But in my view, the credit bubble in China has been used relatively wisely. Now, I'm aware that some websites show empty cities and so forth, but this has always been the case, that there were lots of empty areas, and in the end, they were filled. In other words, occupied. And some misinvestments or malinvestments have undoubtedly occurred. But in the U.S., they borrow money to essentially hand over the money to other people. In other words, the money is collected through taxation or through the issuance of bonds, and then it's fed into the healthcare system, into the education system, and into social security and retirement accounts and so forth. So I think that in essence, the money printing in China and the fiscal deficits in China have been used more wisely in terms of future economic development.
We'll have more with Marc Faber when we return.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
This Week in Money is archived online at talkdigitalnetwork.com
Welcome back. We're speaking with Marc Faber. Marc, the bubble real estate markets in Canada are starting to collapse. Is this likely to put pressure on the Canadian dollar?
Well, I wouldn't call it a collapse, but we had this huge bull market in real estate in all the Canadian cities, and I'd say we're now off approximately 10-15% from the top. But if you go up 400% or 300% and then you're off 10-15%, I wouldn't call that necessarily a collapse, but it's weak. That is a fact, and I think the weakness will continue for a while. And this is a general problem in the world, economically speaking, that despite money printing, asset markets have begun to weaken. I mean, the New York market, some indices in terms of stocks are at an all-time high, but not much higher than in January 2018 or in September 2018. But a lot of stocks are already down. There's only a handful of stocks that are making new all-time highs. And in real estate, the latecomers, of course, they're not going to make any money for a long time. So this asset bubble globally that is now deflating can have on a asset inflation-driven economy a very negative impact. You understand? If people lose 10% of their assets or 20%, then it will have an impact on consumption. And so, I'm not an expert on Canadian property prices. From what I read, they've been going down lately, and from what I can see, I think they'll go down much more. But it hasn't collapsed really yet.
Are you avoiding investing in Canadian banks?
I prefer at the moment to invest in European banks. In fact, in European stocks, because the sentiment about European stocks has been so negative for so long, both about stocks, about real estate, and especially about banks. So I think there is some value now in banks. About a year ago, I told my clients to essentially look at Swiss insurance companies. They've done very well in terms of stock price performance. And even after this good performance, when you consider that they have a dividend yield of, say, 4 or 5%, and the Swiss 10-year bond has a negative interest rate, as I just explained, then the Swiss insurance companies look relatively attractive.
Marc, how can people find out more about the Gloom, Boom, and Doom report?
Well, I have a website called gloomboomdoom.com. I repeat, gloomboomdoom.com. And there's all the information.
Marc, thank you so much for chatting with us.
Well, thank you very much for having me on your program. And I wish you all a happy Easter.
We'll do our best. My guest has been Marc Faber, editor and publisher of the Gloom, Boom, Doom report online at gloomboomdoom.com. He was speaking to us from Chiang Mai, Thailand. Coming up, Chris Vermeulen, next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Chris Vermeulen from thetechnicaltraders.com. Welcome back to the show, Chris.
Hi, Jim. Thanks for having me.
Chris, natural gas making moves?
Yeah, well, natural gas, it's been fading down here for the last few weeks, and really about a month or so. And today, it's finally kind of looking like it could be having some type of flush out low, meaning it's finally seeing a big drop here. A long-term support line on the natural gas continuous contract at the 255 level. We've seen it hit 6 times in the past. We've always seen a strong rally. Big question is, are we going to see a rally this time with it? for it. It's a weekly based chart. I think we could see a 3 to 5 week rally from this point, as long as it can find support here. And I think natural gas looks like a great opportunity down here at the lows and everyone panicking out.
So after this point, are we expecting natural gas to have an upturn, or is there a downturn as we go into the summer?
Well, last year we ended up seeing natural gas rally through the whole summer. It bottomed in February, had a nice bounce, and then corrected back in March, April, almost the same as what we were seeing this year. And then it rallied and moved higher through most of the summer. So it could very easily happen again. And, seasonality-wise, it's pointing to higher prices over the next month. But it could definitely continue to drift back up into that $2.80, $2.90, maybe even the $3 mark.
Crude had a 6-week advance. Do you expect that to continue?
I do. Crude oil it's got really strong charts still. It's in an uptrend. On balance volume is good. There's a lot of accumulation going on. That being said, and you look at the big chart, about $66 per barrel on the continuous contract is going to be a really significant resistance area from back in 2018. And it's going to act as definitely a ceiling when it gets there. But, we're still only at $63, $64 per barrel now on the continuous contract. So it's still got a couple dollars to go. And then it's going to struggle probably for several weeks and try and put in some type of topping formation potentially. So I am bullish on oil, but 66 will be pushing its limits. I don't know if it'll go much higher than that.
Does the summer driving season drive up the price of oil, or does it just drive up the price of gasoline?
Hey, yeah, every year the price of crude oil, it changes. Some years we see we see it, kind of trade sideways or lower through the summer. Other years we see it rally like we did last year. So you never really know. I feel as though it's getting to the upper end of its trading range, meaning I don't think it's going to go a whole lot higher and continue higher through the summer. I think we're already kind of near that ceiling, so at best we'll probably be trading around this level. But I would expect we fizzle back down to the 55, 57 area by later this year.
Chris, before our interview, some of the people I talked to, I asked, do you think the New York Stock Exchange Index is going to set new record highs? Well, a record high was set, wasn't it, in at least one stock market?
Yeah, well, there are new highs. I was expecting new highs potentially this year for the markets. The NASDAQ tapped new highs, tagged it today, and as soon as we saw the new highs on the NASDAQ today, huge selling volume stepped in and completely clobbered the market. It's almost like some big players were saying, if we break to new highs, they're going to unload a bunch of positions, and we just saw huge selling volume step in for about an hour and a change this morning, and really kind of push those prices down. But new highs is a good sign. It does get a little tricky if you're thinking it might be a top, because the markets love to make these nominal new highs where it pokes at just a little bit of a new high and then they get sold off. And what it's doing is it's shaking out all the short positions, the people betting against the market, and the market loves to try and get as many people out of a trade before it moves. So it'll be interesting to see where the markets end up. We did get the new high there, so we'll see how that momentum carries forward over the next week or two, and kind of gauge from there.
Now, after we find out after a couple of weeks, again, so many people are worried that we're going to see a major slide, just like real estate prices in Vancouver and Toronto. Do you think the market could lose 35% of its value, or have we seen in the past over the last couple of years where it will lose 20% and then bounce back because the last quarter was the best quarter pretty well ever seen on the stock market?
Yeah, I know. It's tough to say. I feel as though we're coming to the end of a bull market, and I felt like that for quite a while, but we have never had a technical breakdown yet for us to be in one. In 2015, we were so close. This year, you never know. If we break those December lows this year, then we will be, if we break them and close below them on a monthly chart, we'll technically be in a bear market, in my opinion. So, the trend is still up. The market has been very strong. I do feel like there's a correction coming. The question is it just a continuation correction? It pauses for a little while, pulls back, and we continue to see the market go higher? Or are we going to get a much deeper correction, break the December lows, and then it's lights out? I think the music's going to come to an end. I don't know when exactly. I mean, there's no point in trying to pick a top in the market. You can start to be very cautious of adding any new long-term positions here, but you really got to still stick with the trend. And when it breaks down, it'll be a great opportunity. There's lots of money to be made in a falling stock market, and it falls 3 to 7 times faster than it rises. So, 1 year bear market, you can make equivalent percentage gains as you would in a 7-year bull market. So, really, you can't try and guess and pick the tops. You got to stick with the trend. And at this point, I'm a little kind of bearish short term. NASDAQ at new highs. Other indexes are testing very close to new highs or recent highs. So, I think we're going to get a little softer here and see the market consolidate.
We'll have more with Chris Vermeulen right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening with the U.S. dollar?
Well, the U.S. dollar's been, it's been trading in this nice upward trend or channel from January of 2019 of this year. It's been kind of oscillating up and down in this rising channel. It broke below that during the Brexit kind of deal. We had a kind of a little bit of a shift in the momentum. But it has again formed in March, the second half of March till now, a very nice bull flag. And it's testing under the recent highs around 97, which were also some significant highs back in 2018. So to me, we've seen a nice little run in a consolidation in the dollar. At this point, it looks like the dollar has the momentum that it should hit $98 on the dollar index chart, I think, within a few weeks. And that kind of coincides with I've been expecting lower gold prices. We're starting to get a breakdown in gold. If this dollar pops and starts to run towards 98, we're definitely going to get that big washout in gold, silver, and miners that we've been expecting. I've got analysis showing we should see a low in the precious metals market around April 21st, somewhere in there, not to the day, but give or take a week on each side. We should start to see metals put in some type of bottom. So I think it's very, very close to a strong dollar run and a very strong sell-off in precious metals. And I think they're both great opportunities to the downside and to the upside going forward because there's some decent percentage moves.
Because so many people expect a big stock market correction at some point in the year, is buying up that gold and silver at lower prices a good idea?
I think it is. I'm actually getting excited to buy some gold and silver. I mean, for a long-term position, I think there's certain dips in the market, certain times when it's good to add. And I think this month, possibly next month, see how much selling pressure we get to add some gold and silver. And if the stock market does start to top out, we're going to see gold miners. Usually, they'll outperform the equities market for 1 to 3 months. So we could have a very strong couple months in precious metals and the gold miners if the U.S. equities markets start to kind of teeter up near these highs. So I am bullish on metals and miners here. I think we're getting close into a buy point, and they could have a very strong push looking forward to 3 months from now.
So, Chris, how would you sum up things, and what do you expect?
Yeah, I mean, if you're an investor, I mean, you got to stay long equities. I wouldn't be dumping any large sums of money into the equities market right now. I feel as though they're frothy. It's, again, been one of the strongest quarters that you mentioned there. You don't really want to add after the strongest rally because usually what goes straight up likes to give back some of those gains, just around the corner. So you want to try and buy on the fear, buy on some pullbacks, and this isn't the time to get long. In terms of precious metals, I think we're coming into a really great opportunity over the next 2 weeks to potentially get in for a swing trade or for a trade that could last several months as the miners find a bottom and start to rally. But I think there's more downside to those before you want to get long the precious metals.
Chris, thank you so much for being on the show.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. Our conversation took place on Wednesday. Coming up, Tim Cyclesman Wood, next on This Week in Money.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
We're speaking with Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. Welcome back to This Week in Money, Tim.
Jim, as always, thanks for having me.
Tim, where are we now in the equities cycle? I hear the NASDAQ actually topped its highs set back in October.
Yes, it did. Looking at the industrials, it did breach them just a little bit, which confirms, where I was thinking we were cyclically. So that's actually a good thing as far as clarity of where we are and what's going on. On the industrials, we're basically at the same level we were 15 months ago. And I think this is all occurring within a major long-term topping process in association with the giant liquidity debt bubble. That's pretty much a fact. The liquidity debt bubble, those are facts that haven't changed. And, the market, like I said, we're revisiting these levels for the third time in 15 months after the decline into the December low. So I still think that, like I said, it's within the context of a major topping process. Within the context of the cycle lows that we had in December, I think it's inflate or die time. I mean, I think this is where either, the bubble has to be reinflated, or the failure to reinflate it is going to equate to the unraveling of the bubble. So it's a critical technical cyclical juncture for the market, and the test is at hand, and how well the market can hold up, maintain, tread water, whatever you want to call it, is, like I said, beyond critical, because it ultimately has to reinflate, or I think it dies.
Well, we're coming off one of the best quarters ever for the New York Stock Exchange Index. Can that be sustained?
That's the question. If you look at it, on the one hand, you say it's reinflated. I get it. Obviously, we're way back up off of the December lows. But on the other hand, like I said, looking at the industrials, we're at 15-month levels. So yes, there's been some reinflation of the bubble. You can argue from one perspective. From the other perspective, we've gone nowhere. And I'm not talking out of both sides of my mouth there. I'm not trying to pick sides. That's a reality. And so what I'm saying is to draw any conclusions at this point, it might be a little early. The test is at hand, and this market is swimming against the tide here. Looking at the setup, yes, so far it's held up. At this moment, I still have intermediate term buy signals. Short term, we should be getting towards some kind of a top, and even intermediate term, we should be moving into some sort of a top. But as of this interview, there's nothing. Now, timing-wise, again, there's some tops due, and we have to just see how the market handles those intermediate term cycle tops as we move into that top and roll over out of it. That should be kind of telling and a test for the market.
How are industrial commodities doing?
Commodities is kind of the same thing. I think we had lows of similar degree in the commodity complex. When I say the commodity complex, I look at the CRB. Oil, same sort of thing, same sort of cycle degree lows. And when I look at commodities and particularly oil, I do think that this is still a counter trend advance more than likely within the context of those higher degree lows that occurred. But it goes back to the same statement I made with equities, inflate or die. If you look at the facts, they bottomed together, they've rallied together, and now if the commodity bubble, I say the commodity bubble, there's really that pop back in 2007, 8. But if this commodity thing cannot be reinflated along with the equity bubble, I should say, then I think that's going to be maybe the canary in the coal mine in one respect. It's going to be, I think commodities is going to, how do I say this? I think it is going to be somewhat telling of what we can expect in equities. I say canary in the coal mine. The real canary in the coal mine, I think, continues to be the dollar, which we talked about all year last year, and going into last year, with the higher degree low that occurred in February. And I think that, the bias to the dollar is still to the upside. I think that is key. And I think interest rates are key. And I do not think that lower rates are necessarily good at this juncture. I know that the rest of the world thinks that, but I did a study on that in the last research letter. Don't know if you've had a chance to look at that, but lower interest rates here may actually be the canary in the coal mine, that and the dollar.
Right now, we have a president urging lower interest rates. Do you think he knows if that's the right solution or not?
I think the blame game has already begun with kind of front running to the trouble that markets have, or I say the trouble that markets have, the trouble that the markets are potentially in. They're a thin ice scenario, lack of better words. I think that the powers that be know that this market is like I said, it's inflate or die. And as I read it, I mean, I don't know what's in somebody else's head, but it clearly looks like to me that it's the blame game has begun. And I want to try to lower rates to try to, refuel the bubble. Like I said, inflate or die. But I think that this time lower rates is not going to be a good thing.
We've gone through a period of record corporate stock buybacks. What happens if that slows down or stops?
I think that's part of the reinflate or die. I think if it slows down, then obviously that's going to weigh on the market as well.
With gold, is this a place to buy it, or do you expect gold prices to come down now?
I have been for, a year or more, basically bearish on gold because of the 9-year cycle top. We've discussed that in our regular interviews. My views on that have not changed. So far, they appear to be correct. We had a nice counter-trend rally out of the August lows. That's run its course, and I've said that it was counter-trend all along, but I said we had to get to a point where we had intermediate-term sell signals, which we did see. And today, last I looked, the gold stocks were getting hit pretty hard. They were down, almost 2%, and I think that gold may be front running, if you will, commodities. In other words, they've peaked and turned down. The CRB is still kind of lingering. I think it's the pressure's gonna be on it once oil peaks, and like I said, we're getting into that time frame seasonality where, I'm not saying we're there yet, but with generally getting into the window of opportunity for the seasonal top in oil. So I think the real test is going to be just ahead in commodities, and then the pressure will be on those higher degree cycles that bottomed back in December.
with oil prices, are they going to come down over the summer, or are they going to stay stable or even rise?
I think there may still be some upside left in them. I don't until I get a signal. It's like a light switch. It's either on or it's off. Right now, it's on. I still have intermediate term buy signal in crude oil, and it sounds like kind of a contradiction in terms, but it's not. I think it's counter trend, and I think that oil prices do roll over and they come down. But until I get a signal, hey, it's up, and I don't know when that signal is going to occur. We're in, like I said, seasonality. What you tend to see is just what we've seen. Crude oil prices tend to bottom, late in the year, very early in the year, November, December, January type time frame, seasonality. Sometimes it'll be as late as March. And I'm talking in general terms, not literal, but the general tendency is that you get the bottoming, the time of the year that we saw it, and then you peak somewhere in the May, June, July, maybe it's August, but you tend to peak in the summer months. So, does it stretch on into May or June? Maybe. But I think that it's counter trend, and we're pushing into a top, that would be synonymous potentially with, the higher degree top in the entire commodity complex in the CRB.
Tim, can you tell us a little bit about Cycles News and Views?
Yes, it's it's a statistical based service. Basically, Cycles is nothing more than trend quantification. And so if you can wrap some statistics around the cycles, then you have some expectations to work with. Also, it is steeped in Dow theory, which, Richard Russell helped me obtain years ago. A lot of the original writings from our Dow theory founding fathers, and I use Dow theory cycles, which, like I said, is quantitative trend analysis, and then I have my own little system that, kind of marry the two together and look out over the horizon. One thing that we have seen with this bubble is we have seen the enormous stretching, extending, distortion of these cycles. It does not negate or change, the ultimate outcome. It reminds me, this is 2007 on steroids. I said, during that period when the cycles were extended and stretched, that, hey, it's not nice to mess with Mother Nature. I don't know if you remember that commercial, but, the snapback occurs and it's only making matters worse. And that's what we're seeing here. This has been, the cycles are still very much alive. They've been, extended. The big picture, this entire rally out of the 09 low and then the further extension. So we have this massive top, I think, that's forming. But overall, when we get the setup, I think the snapback will occur, and it's going to be a sight to behold. I'm afraid. That said, all of this big picture stuff, the quantitative analysis and Dow theory is covered in the letter, and the analysis that I did on interest rates maybe not being such a good thing to see lower rates this time is covered in the last letter.
Tim, thank you so much for being on the show.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Dr. Marc Faber, Chris Vermeulen, and Tim Cyclesman Wood. And thank you for listening. If you have any questions for our guests or for the show, you can send them to info@howstreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Welcome back to the show, Larry.
Well, Jim, I'm just looking out at the weather there and thinking, how am I going to hide my Easter eggs this weekend?
Yeah, you're going to have to use the real good dye so it doesn't wash off. Larry, you came up with a term I hadn't heard before in your latest news release. What is it, and what does it mean?
Well, that's very interesting. I think it's a very catchy name, and it really differentiates our urban mining from our regular mining. And RecycLiCo is the name that you're thinking of, Jim. RecycLiCo describes what urban mining is all about, and it differentiates between our mining properties and our recycling opportunity. And it's an innovation of American Manganese, Inc. for recycling cathode materials from spent lithium-ion batteries. And that's we call it the RecycLiCo patented process, for which we hold patents. And it just basically is, I think, is a real sexy or catchy name for a company that is going to be recycling batteries. And a lot of thought went into it, and there's a video out on it. There's a news release out yesterday, and it's very descriptive. It was picked up by half a dozen different articles. That's one of the good things about this part of the business, Jim, where you're recycling. Before, you couldn't find anybody talking about it unless they were putting it down, and now you're starting to see articles that are based around it. We were mentioned in an article alongside Tesla. That certainly gives us a good exposure to the Tesla shareholders, and it can't do anything but good for the company. So that's RecycLiCo in a nutshell, and that's the name that you'll be hearing a lot more of. It's a trademarked name, and it's owned by AmericanManganeseInc.com, and we'll have a separate page on our website that goes, deals strictly with the recycling opportunity. So it's streamlining everything. It's getting things ready for down the road. And that is, one of the goals that we've been trying to accomplish. We've made a lot of breakthrough announcements in the last 6 weeks. The partnership with the DOE labs, AIMS, and Critical Materials Institute. Those labs are now partnering with us. We're a private company that is Canadian, and the only private company and Canadian company that's on this initiative. That's a big verification for us. It says something about our process. Certainly we wouldn't be there if we had some Mickey Mouse process that was in the back room. This is a patented process. We expect to get another patent in the next couple of months on that we filed. And so that's going to be more further news that is going to be coming out. The other big thing was, of course, getting the patent and the patent number itself. And although it was approved in December and published in December, we didn't have the patent number until just recently. So these are things that are happening that are keeping us out in front of everybody. And we want to be leaders in this. We were probably one of the first, well, not the first, but a company that was not associated with batteries or EV cars that were looking into recycling. I can remember the first meeting we had with a battery conference down in Illinois, and there was four, including us, companies that were talking about recycling batteries. They were one was a university, the others were private, and at that time we'd already had our proof of concept, and we're getting high recoveries utilizing now we call it the RecycLiCo patented process. And now there's got to be 100 different companies out there talking about recycling, and if I know anything about markets and critical mass, we're going to start to get some attention in that direction, especially on the market, where, you know, I've talked about what's happening with predator trading out there several times, and but it's all I have to point out is that most of the time we close on the market, we close a 0.5 cent lower on a cross of 2,000 or 3,000 shares at the end of the day. And that cross, you know, raises two questions with me. Is there a change of ownership in those crosses? And the other question is, you know, why somebody's closing it down? There's got to be a reason for it. And but the thing is that we have a patented process now that is proven. We've got 3 stages to go through on our pilot plant. And when we get those completed, which will happen sometime before the end of next month, then, you know, we're all the way through with what we have to do in the pilot plant. So this is all good news. You know, certainly, we try to keep our investing public informed about what's happening. Hence, we do these podcasts every week. There's always news out there. It's an exciting arena to be in. There's always news on the amount of batteries. They're talking $23 billion worth of recyclables in 2023. That's with a B, billion, $23 billion. Well, will we get it all? Nah, probably not. But certainly we do have a cradle-to-grave solution that should be embraced by these battery manufacturers. They're always under pressure to do something with the batteries. And they've, as far as I'm concerned, the current situation is kind of a make-do situation. And I expect that we'll be getting more and more interest from these electric vehicle battery manufacturers on recycling because, you know, we can turn around the recycled material and it's battery ready. I mean, it doesn't have to go through expensive chemical processes to change the chemistry of the cathode material. It's already done with our process. That saves a tremendous amount of money, and as we know, the EV cars are getting more and more popular, and the biggest reason is that the cost of the cars are going down, and the cost of the battery is the most significant part of that. We can contribute to the reduction of the cost of the cathode materials for the battery. So I think that anybody that's astute should be looking at this and saying, hey, you know, these guys got something, and we should be talking to them. So we are talking to different groups, and but nobody has, you know, pulled the trigger on anything yet, and I couldn't even begin to guess when that'll happen. I do know something about critical mass is when more and more people are getting involved in the recycling arena. More and more eyeballs come on recycling, and means more and more eyeballs on us. So, you know, we're coming up to the long weekend. We're taking the 4-day weekend here. Everybody's been working really hard. They deserve a rest. And then we'll be back in harness on Tuesday next week. So, but it's an exciting area to be in, Jim. There's always news out there. It doesn't matter if it's directly involved with the company or if it's directly involved with recycling. There's always news out there that we like to update our shareholders on.
Larry, where can people get more information about your company, and where are you traded?
They can get more information on our company, including RecycLiCo, by going to AmericanManganeseInc.com. And we are traded on the Toronto Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. We can be reached at 778-574-4444. You can email me at LREAUGH@AMYMN.com.
Larry, thanks for the update and the new word for our dictionary. Have fun frolicking with the Easter Bunny.
Well, I will certainly do that. I'll be watching out the window to see where he hides my eggs for sure.
My guest has been Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on April 18th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.